Hello, friends, and we have some good crypto news for you. First of all, crypto might actually get more friendly in the lands of New York. And it's the lawyers that are fighting for this, not the massive crypto advocates. And because they want crypto to stay in New York and they want companies to put up headquarters in New York. So, New York Bar Association pushes for crypto law reforms to halt crypto exits. The association seeks to maintain New York's preeminence in digital asset transactions, not just paper-based financial transactions. So they want companies to stay in New York. This is from Cointelegraph. And it's the Bar Association, otherwise the Lawyers Association, that has helped propose a new amendment related to emerging technologies because they want those emerging technologies in New York because the Bar Association wants to fight those legal cases and wants to increase their legal fee rating. So they want to encourage crypto firms to set up headquarters in New York, and they're actually afraid of the outflows from New York of this new technology. They're seeking amendments to promote technological and commercial advances that decrease transaction costs and enhance the efficiency and security of financial transactions governed by the New York Uniform Commercial Code, or the UCC. New York licenses or BIT licenses are notoriously hard to get, and this might actually change that. The amendments propose to adapt New York's UCC to recent and potential future development in technology, and it has not been updated since 2014. And of course, it highlights that New York, especially the city, because of the financial capital of the world, is risking losing digital asset market participants, as 11 states have already enacted model UCC amendments proposed by the Uniform Law Commission, while another 15 states and DC have introduced bills based on the amendments. So they're seeing other states, other jurisdictions amend their UCC code, and they want to amend it too because they don't really want crypto to set up shop elsewhere. They're also looking at crypto leaking offshore. So they're actually saying New York risks that market participants will prefer one of those states for transactions involving digital assets, or even the law of other countries such as England, although the UK is probably not the best place because they're pretty strict too, which are rapidly reforming their commercial laws to accommodate emerging technologies and electronic transactions. This is not very good news for Gary Gensler as well. This is just another piece of proof that people are actually going to more pro-digital assets and more anti-Gary Gensler and anti-Elizabeth Warren. Of course, New York still has the world's largest number of crypto companies. You want to go where the money is, and that's New York. But if the laws get too bad, firms will actually leave New York, and New York will actually be left hanging. New York has ranked as the third best crypto hub in Recap's annual list of top crypto hub cities, with 1,400 employees in crypto-related positions. And of course, at 843 firms at the end of 2023, it is still the biggest crypto hub location. So the top 20 crypto hub cities: London, Dubai, and then 3 is New York City, 4 is Singapore, 5 is Los Angeles, 6 is Zug, Hong Kong, Paris. And you're wondering, outside of Dubai, why aren't any of these in the Middle East? It's because, the money is still within the United States. Money talks, folks. Regardless of what ridiculous rules we have here, as long as most of the money is here, companies are going to continue to come to the United States for crypto-related activities. But of course, there's other places like Dubai, London, Singapore, Zug, Hong Kong springing up that are also financial centers, and that companies might actually move to if your rules get too tight. And they want to accept the new amendments. The amendments will also help ensure New York's leadership in commercial and financial progress and growth, and will disincentivize migration of digital commerce to other jurisdictions, especially other countries. And politicians are actually looking at that. These are really good paying jobs and can really basically jolt the economy. New York has been named the worst state for crypto taxes, while Florida has been named the best state. And you can bet that people that are making crypto money are looking at things like that, and they're moving to Florida. So New York might actually become more friendly to crypto laws because they're going to have crypto law reforms. The BIT license might be easier to get. The taxes may actually get better. And that's because they want to incentivize people to actually move to New York to do their crypto business, because otherwise it might actually get pretty bad for New York, and they might actually lose their moniker as the financial capital of the world if this new financial market moves entirely to Hong Kong or Singapore or London or something, that would be a big loss, not only for New York, but for the US as a whole. So very good news. The Bar Association, which is a lawyers association, which has some power, obviously has wants reforms for crypto laws to make them more friendly to crypto companies. Standard Chartered, which is a major bank, actually thinks Ethereum can hit $4,000 by May. And of course, May is the ETF approval, so the price might shoot up until then. If Ethereum does hit $4,000 before May, you should definitely think of selling your Ethereum before May because it's probably going to go down just like Bitcoin did after the ETF. Now, it might recover within a couple of weeks, but there's probably going to be a sell-off just like the Bitcoin ETF. So they anticipate the magic date of May 23rd, which is the final deadline for the Ethereum ETF. So Ether obviously is the second largest crypto market value, and they're saying it could rise by nearly 70% to $4,000 by May, because there's a lot of applications for spot exchange traded funds, which will likely win regulatory approval in the U.S., Standard Chartered Bank said in a report on Tuesday. And I think this has actually been telegraphed. I know a lot of people don't think that anything besides Bitcoin is going to get an ETF. I don't think like that. I think like once they open the floodgates for the Bitcoin ETF, there's no real reason to reject the Ethereum ETF. And I do think like May is a good timeline because that's the first final deadline. Hester Pierce has also signaled it, saying there's no need to fight regulatory wars over this one. We'll just go with the flow, and we will probably approve the Ethereum ETF just like the Bitcoin ETF. So May 23rd as provisional day for an approval, the date of final deadlines for applications sent by Van Eck, ARK, and 21 shares. So you might see a big outflow from Grayscale as well because Grayscale is basically greedy for funds, and they're going to lose their position in the market because they are greedy for funds. The market currently underestimates the odds of an approval, according to the report, but the bank sees no fundamental reason for the SEC to treat Ethereum differently than Bitcoin. Remember, Ethereum is also the only other crypto that actually has another futures ETF, and that was the excuse they actually used to force the SEC to accept the Bitcoin ETF. So Ethereum's ETF probably very likely to get accepted as well. Heading into the expected approval date on May 23rd, we expect Ethereum prices to track or outperform Bitcoin during the comparable period. And I expect Bitcoin to go up too because of the halving period. The report also said the Ethereum would face less selling pressure after a potential ETF approval than Bitcoin because Grayscale Ethereum Fund has a smaller market share. But it also takes less money to move Ethereum as well. So I expect some Ethereum growth in this period that is going to outstrip the Bitcoin growth in this period. And speaking of outflows, Fidelity itself, by itself now, is actually like offsetting the Grayscale outflows. So the Grayscale outflows have definitely gone down. So what we have is outflows from Grayscale's Bitcoin fund slowed for the fifth day in a row, while Fidelity's spot Bitcoin ETF saw one of its stronger inflows days since launch. Fidelity's spot Bitcoin exchange traded fund reportedly pulled in $208 million from Cointelegraph, and that outstripped the outflows from Grayscale Bitcoin alone. Right now, I think we're dumping a little bit because of the fear of like what the Fed might actually do tomorrow. I don't think the Fed is going to touch interest rates, and I do think some people expect an interest rate drop, so there might be a small drop tomorrow. But in terms of funds flow, I think Fidelity is, I do actually think like funds flow, it definitely favors the bulls at this point because there has been outflows from exchanges, which means people aren't selling anymore, which means people are keeping Bitcoin in their own wallets now, which should tighten the supply for Bitcoin. And with Fidelity buying more than Grayscale is selling, I think the flows definitely favor us. The latest GBTC outflows mark a nearly 25% drop from $255 million on January 26th and a 70% drop from the fund's peak daily outflows of $641 million January 22nd. Whereas like those are the couple of days that we've actually come down from January 22nd. It's also the second lowest outflow day for Grayscale's fund besides the $95 million that left the fund on January 11th. The day was converted into a spot Bitcoin ETF. So we're really, really going down. And basically like, and Grayscale's GBTC maintains its liquidity crown, trading $570 million, and $110 million are more than second place for IBIT today. So like the thing is like, even though Grayscale still is rocking volume at this point, the outflows from Grayscale, the outflows from Grayscale are definitely coming down. and the inflows to other assets are definitely surpassing Grayscale's outflows. So therefore, overall pressure is definitely going to go up, and it's going to go more up as time goes on. Because I think most of the people that wanted to flow out of Grayscale has already flown out of Grayscale. I don't think people are selling that much anymore. I think like other retail and institutional investors are actually buying Bitcoin ETFs from IBIT, which is BlackRock, or Fidelity. And those two are really, really raking it in right now. So I think we are going to have like tens of millions of dollars of net inflow in the upcoming days or weeks. And eventually that definitely will boost the price up. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.